Good afternoon. Today is Monday, July 24th. The time right now in Singapore is 12:36 in the afternoon. And now we're going to do a bit of recap as to what markets has been doing last Friday. We see that U.S. equity markets continue to stay sidelined. Basically, the market is taking profit ahead of this week's FOMC meeting, which is the Federal Open Market Committee, in which the Federal Reserve is going to decide if it's going to hike rates, pause, or even cut rates. But market has already priced in almost 100% chance that the Federal Reserve is going to hike rates by a quarter point, and this is already been priced into the market. So unless the market surprises, it is highly unlikely to move the markets. What's important is that the Federal Reserve Chairman is going to talk to us as to what he thinks is going to happen for the balance of the year, because last month in June, he actually told us that there's going to be 2 more rate hikes for the balance of the year. So if we consider this week's one rate hike of quarter point, that means the market only is looking towards perhaps at most 1 more rate hike, and that will be the end of the year, and the market is pricing in this as a positive for equity markets. So we will have to see whether that is the case going forward. Now in the Dow Jones itself, we can see Dow Jones actually traded to a high last week at 35,372.77. Now this price is actually very, very rich, because within the technical point, I do believe this area is actually very vulnerable to the sell side. I believe right now the market does appear to be favoring the counter trend trade here. Anytime the market trades within 35,233 to 35,825, I think that is a great level to position short. I have already gone short the market, and I'm just taking this for a very short-term retracement, or what we call a correction. Near-term target is somewhere around 33,600. I have an alternate target at 32,600 levels. So both levels could be achievable if we do see a sustained correction. So we will have to watch out for that. Okay. In the meantime, the S&P 500 is again at a new high for the year at 4,578.43. Again, this is the same level as what I would consider the market to be vulnerable. So long as the market stays within 4,548 to 4,637.3, I think that market is actually vulnerable to profit taking. And if that's the case, we could see a technical pullback. And right now, my immediate target for any kind of pullback is temporary at 4,385 with an alternate target at 4,330 levels. So do watch out for any one of these 2 levels to be hit if we do see a sustained retracement. In the Nasdaq, we do not have a classical retracement yet, but a market high is 15,932.05. This is where the market is becoming very interesting, because towards the last 2 days of trading for last week, we see that the Nasdaq actually pulled back a lot deeper than the Dow Jones or even the S&P 500. And also today, July 24th, is going to be the day in which they are going to balance the component stocks that make up the Nasdaq 100, because we have seen this year that most of the tech stocks that rally has taken the index itself for both the S&P 500 and the Nasdaq 100 to a high levels, when the other component stocks are not really doing very much. So we have a undue weightage favoring the tech stocks. So now they are going to rebalance those mega cap stocks to make sure that the index itself is more representative of the component stocks market activity. So this could have a material impact on the valuation of the index itself. So we will have to see how this all going to pan out. Nobody has any idea, because we have never seen such a thing before. In the middle of nowhere, they want to rebalance the index itself. So if we do a sustained correction, immediate target obviously is at 14,924 with an alternate target at 14,690 thereabout. So do watch out for a potential correction going into this week FOMC meeting. Now over in Asia, we can see that Hang Seng Index is basically coming off this morning as we are speaking. The market has actually bounced off 18,280 levels, but it couldn't sustain. So right now there are 2 possibilities. One possibility is that the market continue to edge higher towards the 20,000 levels. The other is that the market will come down and test the 18,000 levels, and if this level is taken out, then obviously the market is going to go lower. However, if the market do come down first, I think that will be a possible buying position. 18,044 to 18,285, I would think that will be a great level to consider a very speculative long position, hoping the market will rebound from there. And if the trade doesn't work out, the risk is actually very, very small. Just remember, the Hang Seng is in a bear market, so ideally we want to be selling rather than buying, but there are times it makes sense to go counter trend, and this could be one of those situation in which it may pay to actually trade the counter trend itself. Now, in the Shanghai Composite Index, we can see that this morning we have a bit of a rebound from a low point. The market went up to as low as 3,151, very close to the low that we saw at the beginning, in the middle of July itself. So the low traded so far is 3,144.4, and it appears that the market is testing this level, and we will have to see whether this level can actually hold. If the market take out 3,144, obviously the market is going to go much lower, and this is something that we will have to watch. Again, the Shanghai Composite Index is very much like the Hang Seng. It is in a bear market, so do watch out for. From time to time, we're going to see counter trend opportunity. Whether it pans out or not, that it will be another story. And let's go into the currencies itself. Okay, let's look at currency. We can see currency in terms of the dollar index. We can see dollar index has actually gone down, and we can see that last week we have a bit of a rebound. Now this rebound right now is very tentative. I do expect it to come back down again. Now this is the cash index. Let me show you the futures equivalent, which is this futures contract here. It's showing that the market right now is at 100.93, and this level is actually quite ideal for a sell. I do expect the market to go down and take out 99.22, perhaps targeting somewhere around 98 perhaps. Okay, so watch out for another dip in the dollar index itself. So if you are too late in the game and you think that the risk reward doesn't make sense, then of course you have the option to stand aside and watch this development. And for those who still want to add position right now where the market is trading, it's actually offering us a fantastic level to go short. However, risk reward is another story altogether. Okay, and in the euro dollar, we can see the euro dollar is also coming off from the high that we saw last week at 112.75, and in the near term, I do expect the market to bounce a little bit. Let me show you the 4 hours time frame. 4 hours time frame coming up, and we can see that the market is possibly looking to bounce a little bit. If I think the market can bounce, I would like to sell. The market right now, high is at 112.75, and the lower traded on Friday was 111.08. And if we do get a bounce back to 111.70 to 111.90, I think that level will offer a somewhat of a selling opportunity. And if you are of the mind that you want to sell, you can look forward for perhaps a move down to the 109.55 levels to perhaps as low as 108.80. So this will be the bracket of prices for my target if I'm going to sell at 111.70. Over in sterling, it's the same thing. If the market do get a bounce from where we are right now at 128.16, then the market may have a potential to rally all the way to 130 to 130.20, and that level will be comfortable for me to actually take a short. My target is 126 thereabout. In Aussie dollars, Aussie is a bit of a dilemma because the market have pulled back from 0.69 thereabout and is unfolding in a three wave, so there is not much of an opportunity here. So I do not want to buy this because for some reason I think the dollar may actually be trading a little bit softer. So, but I'm not so sure about the Aussie dollars. In the meantime, I have a target at 0.6670 to 0.670. 02, and if the market do dip into this level, you can try to buy, but I won't be taking my chance with Aussie, at least not this round. I have better fish to catch. Okay, in the dollar versus the yen, this is where I want to be in. Dollar yen has rebounded from 137.25 all the way to almost 142 over the weekend, and now the market is within this bracket of prices between 141.15 to 142.10. This level is actually quite ideal for a sell because I do expect the market to go down below 137.25 and then perhaps going as low as 132.30 to 134.10. So we have a bit of a move here, and I think this will be a much better trade compared to the Aussie market. If you don't have a view on the Aussie, I think it's best to just stay aside and watch. Now, the other currency pair you can consider is this dollar versus Canadian. I think the market is bouncing up from 130.90, perhaps in a three-wave rally towards 132.70 to as high as 133 even. So this level will be a much better, much more comfortable level to engage the market on the short side. And this market may have a chance to go down way below 130.90 that we saw last week. Okay. Now, in the energy markets, we can see that crude oil has rebounded back to $77.29. It couldn't take out the previous high here, which was last traded on July 14 at $77.33. So right now, of course, we are not ruling out the possibility of another rally into this ideal target here or my original target from the long side is actually at $78.22 to $80.92. However, if the market fail to go up and start coming down, I think that will be an area for us to actually consider doing a buy here. I think that will be a much better levels. Okay, right now there is no indicative pricing here, but I think somewhere around $73.84, which was the last low here traded on July the 17th, that could give us a little bit of a base here to consider. But again, if you do not want to do this trade, it's understandable. I may not want to do this trade for now. I just want to watch how it's going to pan out. Now, in the gold itself, gold actually peaked at $1,987.42 last week, and he has been coming down. And if we do get a bit of a bounce back into $1,972 to $1,975.50 thereabout, I think that will be a great level to position a counter trend trade. Although the market has been rallying from 1,892, I think the market is doing a pullback, ideally in a three-wave manner, to test 1,945.40. Okay, this will be a much better level to re-enter the market on the long side, in my opinion. But in the meantime, I think the market wants to come off, so let's see whether it can bounce a little bit for us to actually get it on the short side for a short-term trade towards 1,945. Over in the silver market, we can see silver is also coming off as we are speaking. Right now, the market is trading at $24.57. The high traded was so far at $25.27. So basically, I think the market may actually continue to edge lower. Ideally, I want to see a three-way pullback, possibly targeting somewhere around here at $24.10. So let's see if this actually pans out. Okay. Now, in the Bitcoin side, we can see Bitcoin has not been doing very much, but it does look like it might come off a little bit. Previously, I did mention the low here at 29,625 is the low that for this trade. Market may actually take out this low momentarily. I'm actually positioning a trade for a long here, and this is what I think is likely to happen. We have an irregular three wave here, so I think the market may be somewhere in between here to look for a buy position. So let's see if this is actually what it's going to do, because the market is primed to trade higher, in my opinion. Okay, so let's see. Let me position this price label here. Okay, the high trader is 31,875.5. Okay, over in Ethereum, we see that the market is also flatlining. Near-term support likely to be somewhere here at $1,820. It may actually drift lower and test this level going forward. But overall, I think the Ethereum is also looking to go higher. Let's see whether this one level here at $1,820 can actually hold and provide some kind of buying entry level here. In the meantime, this is all I have for you. In the meantime, do know that this week highlight will be the FOMC meeting, which is going to happen on Thursday morning at 2 a.m. Singapore time. So do watch out for that, because today we have a slew of PMI, which are the Purchasing Managers Index for Germany, for Eurozone, for United States, for UK. So we're going to see a slew of PMI numbers going to be released today, starting with the Germany and Eurozone this afternoon. So this will be something that you want to watch if you are having an active position. Okay, guys, thank you very much, and I'll see you tomorrow. Bye-bye.